It's time to do business again. This is Business Incorporated. We have 55 minutes to update you on what's going on around the world on the economy. And here's what we have prepared for you. In China, delegates are gathering for the Africa and China CEO dialogue. That begins tomorrow. Our correspondent, Laddie Williams, is there and will bring us all the details as it begins. And in Zimbabwe, lithium ban is to begin 2027. There's a surge of bad debt in Kenya, and that's in spite of the interest rate cut. Welcome to the program. I'm Ini John Mekwa. We start from the global space as usual. Oil prices slipped in early trade on Wednesday as traders are reacting to weak demand from China and rising output from oil producers. Brent crude fell to just about $66 a barrel, while U.S. crude dropped 64 to $64.77. There you have it. It's a reverse of what we actually had in the morning. In the morning, it was a drop, but we see that it's reversed for this afternoon, 67.75 and 66 for WTI. And the news says that it's that positive sentiment coming from the London talks, which started the day before and ended yesterday, even though the world is waiting for President Donald Trump to give his approval to some of the arrangements. And it's all about the earth minerals. That's what they've been able to talk about. Also, OPEC Plus is moving forward with another oil supply boost, while fresh data shows that China's oil import fell in May. Traders are now watching for the U.S. weekly oil inventory report for it to get clearer. I believe that comes out later on today. And still in the oil and gas space, reports say that Nigeria and Saudi Arabia's state-owned giant Aramco are struggling to reach an agreement on a record $5 billion oil-backed loan after a recent decline in crude prices sparked concerns among banks that are expected to finance the deal. The proposed facility would be Nigeria's largest oil-backed loan to date and Saudi Arabia's first major financial involvement in Nigeria. However, falling oil prices could force a reduction in the loan's size, a deal born at Saudi African Summit. The sluggish pace reflects broader economic pressures, particularly the recent drop in oil prices, driven largely by OPEC Plus' shift in strategy to regain market share rather than restrict supply. Away from oil and gas, gold prices inch high on Wednesday as investors are turning to safe haven assets again amid lingering uncertainty over the U.S.-China trade deal. So we see spot gold up 0.2%, trading just above 3,328 right there. And then we see U.S. gold also up 0.3%, $3,353.50. Spot silver is still in the red from yesterday, 0.63% down, $36.41, and platinum is up 3.14%. That's a whole lot, to $1,251.80, and palladium is also up almost 1%. So yesterday about this time we saw red because there seemed to be some good vibes coming on and there was calm in the market. But at this time it seems investors are sensing some tensions and they're looking for a haven, to edge against some of those uncertainty. And of course, the metals always provide that. Now, back here in Nigeria, the Central Bank of Nigeria has extended its deadline for the recapitalization of Bureau de Change operators to December 31st, 2025. And this comes after mediations between the association, AMCON, and top CBN officials following the expiration of the second deadline for the recap that was given to them. That was June the 3rd. The CBN had initially set the deadline for December the 3rd of last year, but later extended it by 6 months to give BDC operators more time to meet the new requirement. And even with this, only according to the APCON president, only 5% were able to scale through. So we'll see how many will be able to make it by December 31st of 2025. The National Association of Nigeria Travel Agencies is asking the federal government to tackle the issue of cross-border ticket sales, where foreign agencies offer cheaper flight tickets for routes originating in Nigeria. Speaking on this issue, the president of the association, Yinka Folami, highlights the issue of foreign-based agencies undercutting prices for tickets originating from Nigeria. He notes that it is cheaper to buy in Asia than in Nigeria. And if you can be a travel agency in Asia, why can't you be a Nigerian travel agency, bringing markets to the country, particularly when you travel from Nigeria? And that's what they're saying, then this cross-border trading, that it's bad for the market, especially domestic players. He warns that this practice is damaging the domestic travel industry by allowing foreign agencies to undercut local operators. The downgrade of Afreximbank's rating by Fitch has renewed the call for an effective Africa credit rating agency. The Purdy Crawford Chair in Business Law at the Zulik School of Law in Dalhousie University in Canada, Professor Olabisi Akinhube, who was a guest on Business Morning today, says that renewed efforts should be employed to make it work.
It will be, if it functions the way we anticipate, an organization that accounts for proper context in the classification of loans that African states or sovereigns have. That means that it counters what has been perceived quite rightly as bias by the three major rating agencies up to now. And so to just simply say that it is a competitor, even when it is not yet in place, I think is defecting from the real issue. Number two, as you said, is to make it global. It is essential that African states take it seriously. It means that issues around its administration, as I've said, its transparency, will become very critical to building integrity and legitimacy amongst those who would approach them and the work they've been putting out. And up to date, in terms of how they've been stepping out in responses, I think there's a lot that is there in terms of the quality of work that has been thought through about this. Now, we look at African regional organization schemes and how they have worked up to now, one might say there's every reason to be very careful about whether this will be a reality. But the fact that African states have lived in a world that up to now has entirely depended on credit rating agencies that are outside of the continent speaks to the severity, to the importance of the African credit rating agency. And I hope everyone who cares about the cause of Africa will be hoping that this goes right.
Certainly, Africa is hoping that it goes right. Now, we told you that in China now, where Ladi Williams is, delegations from 48 African nations and key Chinese officials are gathering at EB Styles Shangshan International Exhibition Center. That's the designated hospitality hub for the 4th China Africa Economic and Trade Expo, and it's set to begin tomorrow. That's June 12, with 2,000 plus attendees and 4,700 enterprises registered already and already setting up their tent. Well, this year's expo focuses on 10 partnership action plans, including digital economy and green minerals. It's opening tomorrow with the theme, China and Africa Together Towards Modernization. The expo is set to host 30 sector-specific activities covering infrastructure, green technology, traditional medicine, tourism, and youth entrepreneurship. It's an annual event that brings together over 2,000 CEOs, investors, heads of state, ministers to discuss Africa's priorities and set its business agenda. It's the 4th edition. And of course, at a time when China and the United States have this uncertain and tense relationship, Africa may have opportunities right there, and that, of course, will be discussed at this meeting. And as I said earlier, Ladi Williams is there to give us all the details as it begins. All right, now let's head to the markets now with Will Ibong. Will, you're not in China, you're here, but I mean, you have China numbers. I think we should make Ladi go to the stock exchange there.
Exactly, my thought exactly. I was saying
and give us live,
update, track the markets, as in see why is the market in the green, what's driving sentiment.
Ladi has to give us full details of what's going on, not just at the forum. No, you should go to the market.
Of course, we'll make him do that. No, tomorrow's a public holiday. Let's wait for Friday. Okay. So, like, major stock markets in Africa were bloody at intraday. See Nigeria's NGX. First negative close in days now, trading at more than 0.5% down at intraday. The GSE in South Africa also down more than 0.5%, seeing that there's 0.56%, NGX 0.54%. And elsewhere, EGX, that's the Egypt's EGX, was also trading lower, but marginally though, 0.02%. But meanwhile, we saw Nairobi Securities Exchange closing Tuesday's trading session nearly 3% up. The index is now at about 140 points. A massive jump for that index for the exchange. We'll hope to see how they close today. Now we pause on equities. Let's look at the FX and fixed income space in Nigeria. We have joining us Chuka Nwachukwu is the chief dealer, group head trading UBA. Chuka, it's good to have you on the show.
Good afternoon, Will.
Chuka, the CBN, we're seeing that extension of the BDC recapitalization now to December 2025. Is there a risk now that pushing the deadline yet again, will it signal possibly weak enforcement on the part of the CBN, or could it spook foreign portfolio investors as we're seeing right now?
Thank you, Will. I think basically we need to understand the essence of the policy. The policy is as a result of CBN trying to regulate the broad chain market. Before now, that market is highly unregulated, and so a lot of things happen in that market space. And starting from speculation, I mean, of course, speculators who more like speculating against the dollar, and that obviously kind of like affected the demand, or affected us, or actually what's the reason, one of the reasons for the weakness we see in Naira. So another aspect of it is also in terms of insecurity, try to cope, some of these finances of terrorism and all that. So CBN thought it wise to, stabilize that market, and then to, of course, make it more efficient. You recall that prior to 2015 or 2008 precisely, the central bank also regulated the deposit money bank, trimmed it down from over 100 banks to about 25 banks we have today. And so that brought a lot of efficiency, a lot of efficiency, and then of course helped to to cope some of these speculators. And now part of the guideline is where they introduce 2 tiers of license. The first license is the tier 1 license, as it's called. They increase the minimum capital base to about 2 billion, while non-refundable license fee about 5 million. The second tier is the 500, that is number 2, capital base was increased to 500 million, and then 2 million non-refundable license fee. Now, the essence is to give these these BDCs, more room, also to streamline those speculators, and then of course to give more confidence in the system. You can see that after the, some of these pronouncements, some of the policy, we've seen a decline, in fact, if not, convergence between the interbank market and the parallel market, which wasn't what it was initially. And so it will not only breed confidence, it will also help, increase, capital base of these BDCs, and then of course give them more financial power to be able to carry out some of these their transactions.
Okay, so what you're saying, Chuka, is that if we see fewer of these bureaux de change fold, less, let's say they are able to recapitalize because of the delay in the deadline now, we're saying that this would boost dollar availability in the country?
Yeah, absolutely. If you see most of the customers, that ordinarily would be skeptical or scared to go in, to do some certain transaction with the Bureau de Change are already doing that based on the confidence. And then, of course, secondly, it will help, really cope the speculation in the market. So you really now, you're able to see the real demand and not based on speculative demand. And then most importantly, it will also help CBN to be able to plan. It also helps CBN to make it will help the economy in terms of making the liquidity on FX available. Don't forget that because the system wasn't regulated, you have a lot of dollars, dollar cash out there, and that obviously is difficult for CBN to regulate. And so with this regulation, it will help CBN monitor the GDP better. It will help improve efficiency and most importantly, bring back trust in the system.
So is there a risk that at the end of December, when December comes, that this deadline would not be met as per the amount being sought here, 2 billion for tier 1 bureau de change, and you have 500 million for the other tiers. What do you think would happen if these BDCs are unable to meet this recapitalization or this capital by the end of December? What will happen to the FX markets?
I think basically it's not, the thing about Nigeria is that you keep changing the goalpost, and then even if you change it to next year, you see people who will default. But I think basically the aim here from CBN is that, look, we want a strong, vibrant BDC, even if it's just 10, we want them very strong and very vibrant. Yeah, some school of thought might say, okay, fine, it will increase unemployment. But again, if it's just like the banking sector, when banks had the capacity, financial capacity, they were able to expand. And so these BDCs, the ones that are not able to meet up the capital requirement will somehow, merge with the big boys, if I might use that word, and that will also increase increase some of their market share, increase expansion, and then in turn bring in able to increase or create more employment. Now, if it's not met by December 31st, based on this new extension, I don't think that anything will happen other than we see some of the smaller ones merge, like I mentioned earlier. And so, for me, it will bring more confidence into the system. Our FX system will be more regulated. We'll be able to see, true demand, and at the same time, we'll be able to know those who are not in line or towing the line of the guideline. Because don't forget that because it wasn't regulated, we do not have proper structure in place. So now this is bringing structure and then increase customer confidence, and then we begin to see depreciation, because I strongly believe that a lot of the demand we see, why dollars continue to go up, has to do with speculation. But this will really help curb it.
Okay, so there's going to be easing of pressure on the Naira against the dollar, because we've seen the Naira rally ahead of the Muslim holiday as against what we saw during Easter, though. But looking at it, are we going to see the Naira continue to strengthen as a result of possibly what's happening with the Bureau de Change, or what other factor is driving the uptake we're seeing with the Naira, the appreciation we're seeing, and is it going to be sustained for a long time?
I think there are a couple of factors. One is the fact that over the past few months, our external reserve has continued to grow based on the policy again put by CBN, and then of course we begin to see the real demand, not speculative demand. So all that is helping the appreciation of the Naira, and then most importantly, we've seen within the past couple of weeks and months, we've seen more FPIs coming, bringing this much needed dollars, and that has helped to to tame the demand, and of course that has also increased increase the appreciation in terms of the Naira. So It will help in a whole lot. It will help us, of course, like I said earlier, to be able to ensure that proper structure and those who are playing in that field are able to abide by the rules. And I mean, in all ramifications, in terms of security, in the funding of some of these activities, as the security expert has mentioned over time, it will help. And then, of course, once there's improved security in the country, economic growth will begin to boom. So the larger benefits for Nigeria in terms of this policy, is huge. And I believe that very soon we'll begin to see the positive effect of it.
Thank you so much, Chuka Nwachuku, Chief Dealer and Group Head Trading at UBA. It's always good to have your perspective on the show.
Thank you.
So let's head to the Middle East now and see how they fared at intraday. Mostly positive sentiments there. We see major stock markets like Dubai, Abu Dhabi trading in mixed opposite directions actually. 0.19% and Abu Dhabi is 0.14%. Looking at other stock exchanges, there we see the Tadawul, as in Saudi Arabia, trading in positive territory, resuming today, just after, for the first time after the Muslim holiday. So 0.19% up, and the Qatari index is also up 0.15%. Let's now scoot over to the U.S. and see how they fared, especially with the new deal with China and the U.S. Stock futures in pre-market trade today, it slipped after investors reacted. After China and the U.S. reached that trade policy consensus, investors were watching that. They also awaited the release of the May consumer inflation report, which is expected much later. Now, futures tied to the S&P 500 were off. That's down 0.16%. See the Dow Jones down 0.21% and Nasdaq down 0.15%. Let's get a sense of how the markets fared yesterday with our correspondent Maria Bird. Probably give us an insight, background as to why we are seeing this negative.
The U.S. stock market edged up on Tuesday after 2 days of what appear to be upbeat talks between the U.S. and China, as the trade deal seems to be closer than it's been in the past few months. As the U.S. stock market responded positively, the Dow Jones up at 0.2%, the S&P 500 up at 0.5%, and the heavy tech Nasdaq up at 0.6%. Investors were happy to see how the day ended, but they are still watching to make sure that we could see a long-standing impact on the U.S. economy that will allow the U.S. stock market to keep in an upward swing.
Thank you, Maria. We did see that reaction. U.S. stocks are not reacting positively to that news. Probably they're being cautious to see if Trump would approve it. But let's see how Asian markets performed. On the other hand, we see them closing higher on Wednesday after the U.S. and China reached that draft agreement in the ongoing trade talks. Officials say the framework now awaits approval from Presidents Trump and Xi. Now, Japan's Nikkei 225 climbed up 0.55%. South Korea's Kospi hit a 2-year high, up 1.23% at the close of trade on Wednesday. Hong Kong's Hang Seng Index gained 0.84%. That's in China. But look at mainland China in Shanghai. It also rose more than 0.5%, 0.52%. If you can have that on the screen. And in India, Nifty 50 was also in the green. The upbeat sentiment comes as investors bet on improved trade ties between the two world's largest economies. So it's a green market for Asia. Unfortunately, the U.S. is red, red, red. Looking at red and green, that's Christmas colors, isn't it?
Yes, it is. It does seem like perhaps a bit of the conversation has leaked, and perhaps it's to the joy of the Asian investors more than
the U.S.
But I guess we just have to be patient. I'm sure President Trump is not going to keep quiet about this. We're going to get reaction from him.
Of course.
And then
or maybe they're quite, they think that the taco thing, Trump always,
Well, time will tell, Will. Thank you so much. Let's see how the European market is reacting to this. So we see the U.S. market seems not to be happy with the conversations going on in London, or that just ended in London, while the Asian markets are happy. I wonder what's happening in Europe at this time. Lars joins us for this. Hi, Lars. Good afternoon. So we see this contrast between the Asian market and the U.S. market following the talks that just ended in London. I wonder if the European investors are happy or not with the conversation.
Well, Ini, hi. Obviously, it seems very much like we're not just caught in the middle, but we also can't really make up our mind here from an investor side. I mean, we just saw, like you had on screen here, the US down, the Asian markets up, and we are barely moving. And I gotta say, it is quite fitting. I just found it interesting with that look right now here at the Asian markets. They are not up as much as you would have thought they could be up if there had been an impressive deal coming out of these talks in London. And there is no impressive deal. And I guess that is mostly why investors here are also just not reacting. There seems to be, if we're honest, a framework for a deal, pretty much really what everybody had been saying before. China will export some more rare earths and the US will loosen some of its tariffs, but there are no details. It seems we just saw the regular Trump thing go around once again, starting a trade war, getting everyone riled up, promising to do things better, and then in the end reach some kind of agreement that pretty much resembles what we had before, minus some details and maybe even not as good. One economist here actually in Frankfurt called this whole thing a waste of time. But, you know, Ini, it's ridiculous times we're living in. Markets aren't happy about it, and that's why today they're pretty flat.
Yeah, well, as you said, it's a Trump thing, but I'm sure we would hear some more details from President Trump, maybe by the close of business today. But still staying on the topic of trade, we hear that the German government is thinking up new ideas to strengthen the economy in the midst of all this uncertainty.
Yes, and that is maybe the more important question here for European investors to the German economy, Ini, as you well know, because we've talked about it many times. It has been in a rather dire situation for a while, 2 years of a straight up recession. Now we're in a third year, maybe hoping for just a stagnation, which, you know, of course, might be better than a recession, but still, Germany hasn't seen any economic growth over the past 3 years now. Obviously, there are a number of reasons for it, with the war in Ukraine leading to an energy crisis. We have that trade war going on. Be that all as it may, it is time for a major change, and that is exactly what this relatively new government is going for. And they're trying to move the goalposts for the German economy, because for decades, Ini, we built pretty much all our economic success on exports. Germany was widely known as an export nation. Among the goods we sold abroad were cars, of course, machines, chemicals, industrial parts. Thanks to the strength of German engineers and developers that over the decades have turned made in Germany into a globally accepted trademark that was clearly signaling quality. But in an effort now to switch gears, the government wants to move away from the export only, or maybe I should say export mostly economy, and also strengthen domestic demand.
Yeah, I tell you, Lars, Nigeria would be so happy if we had that exports dependent economy away from oil, you know. But I guess, I mean, it's one thing or the other for every economy. But I mean, how is this supposed to work? Any indication of what the government is planning?
Yes, Ini, there are plans out, and it mostly goes back to a 500 billion euro investment package that the government has often talked about throughout those last couple of weeks. Now, much of that money is supposed to go towards fixing infrastructure, roads, bridges, tunnels, and so on. But that alone, of course, is not going to spur economic growth. So the government says it also wants to build more hospitals, schools, universities, invest in research and development, strengthen the energy grid. All that, of course, could translate then into lots of jobs and goods sold by all kinds of German companies, many of which are obviously in the industrial sector, in machines, engineering. Companies like Siemens or so, you know, that have long made most of their revenue by far outside Germany. They're apparently supposed to benefit from this investment here within our own borders, hopefully being able to sell much more in Germany to satisfy a higher domestic demand. But no one knows, of course, how fast this all could happen. And there are economists that have looked at the numbers and they're saying it's a good plan. But Germany's economy can't bounce back without a strong export sector. So we will hope, of course, for a normalization of global trade at some point anyway. But it seems they're working on a second leg to stand on, even though it won't be as strong as that first leg.
All right, Lars, we'll hope with you over there in Germany, but thank you so much for the update.
Thank you, Ini.
Right now, let's come to Nigeria. We start from remittances from African expatriates surged to unprecedented levels last year, 2024, and Egypt leading the way as a top recipient among 5 African countries, followed by Nigeria, Morocco, Kenya, Ghana. And this is according to a report by Global South World. The report, as cited by the Middle East News Agency, indicates that remittance flows from African expatriates experienced a remarkable increase of 57%. That may be disrupted with President Trump's new bill. Recent data from Central Bank of Egypt shows that remittances from Egyptians working abroad continue their upward trajectory, achieving an increase during the period from July 2024 to March 2025, rising by 82.7% year on year to approximately $26.4 billion compared to about $14.4 billion. Nigerian remittances reached $19.8 billion, placing Nigeria second. Morocco's ranked third with $12 billion, followed by Kenya in fourth place with $4.8 billion, and Ghana with $4.8 billion in remittances. The report notes that remittance flows in 2023 exceeded official development assistance as well as total foreign direct investment in the continent, which amounted to $48 billion for the same year. Zimbabwe will enforce a ban on the export of lithium concentrate starting 2027, and that's to bolster local processing capabilities. This is according to the Mines Minister, Winston Chitando, and the decision follows the country's prohibition of lithium ore export in 2022 and is part of a broader initiative to encourage domestic processing within Africa's leading lithium-producing nation. Lithium sulfates plants are currently under development at Bikita Minerals and Prospect Lithium Zimbabwe, owned by Simone Cobalt, respectively. And these facilities will produce an immediate product that can be refined into battery-grade minerals or materials such as lithium hydroxide or lithium carbonate, essential for battery manufacturing. And in Ghana, the economy expanded at the fastest pace since the third quarter of last year, propelled by its gold mining and agriculture sectors. The gross domestic product expanded an annual 5.3% in the 3 months through March, compared with 3.6% in the prior quarter. And government statisticians said this, that in the capital, Accra, and that number was released today. We will stay on that in a bit. Before then, there's also in Ghana, the government is rethinking the hefty number of taxes placed on telecom sector. The Minister for Communications and Digitalization, Ursula Owusu Ekufo, recently shared that the current 39 different taxes affecting the telecom industry are under review and might be cut down soon. These taxes, according to the industry stakeholders, are making it tougher to do business and are stifling innovation, from levies on towers to regulatory fees and other charges. The telecom industry is feeling the hit, and it's gotten so bad that operators are calling for urgent reforms concerning that. And we're still in Ghana. There's also the issue with their gold to crude program in Ghana. Well, let's talk more and put all of this together and see what's going on. We do know that the downgrade of Afrexim Bank also has to do with debt issues in Ghana. And well, I do hope we can have a correspondent from Joy TV join us on the program later on to discuss this. Let's take a break now. When we come back, we'll try and get Blessed to discuss this and other issues on the continent. Please stay with us. Well, we'll see if we can get our friend in Ghana, Blessed, to join for this conversation. If not, I guess we can try and do it at another time. But moving on the program, the World Bank has lowered Kenya's economic growth for 2025. And that's down from 5% predicted about 6 months ago to 4.5%. The Washington-based lender cites tighter global financial conditions, mounting fiscal pressure, and sluggish private sector activity for the expected decline. The bank also trimmed the country's 2026 growth forecast by 20 basis points to 4.9%, raising concerns over the country's ability to sustain recovery momentum in the face of domestic and external shocks. The downgrade comes on the back of a Central Bank of Kenya's Monetary Policy Committee announcing a cut in the benchmark lending rate by 50 basis points to 9.75%, a signal of growing concern about slowed economics and reduced credit access. I'm talking about the Central Bank of Kenya. It's seeking to raise about 50 billion Kenyan shillings from the domestic market through the reopening of two fixed coupon treasury bonds. CBK has invited investors to submit bids by Wednesday next week, that's June 18. The funds will be used to support the government's budgetary needs, they say. The two bonds on offer are the FXD1 2020 and 015, which has a 9.7 years to maturity, and then there's also the SDB1 with 15.7 years left to maturity. The auction will be held next week, Wednesday, June 18, with a settlement date slated for June 28, 2025. Investors will participate via the CBK Investors Portal. There's also an app where successful bidders can obtain their payment keys and amounts payable on Friday. And the CBK notes that the minimum non-competitive bid is about 50,000 Kenyan shilling, while the maximum non-competitive cap is set at 50 million for competitive bids, and investors must submit a minimum of 2 million Kenyan shilling for CSD account per tenure. Still in Kenya, commercial banks are counting losses in interest income as borrowers are failing to repay loans on time. Data from the Central Bank of Kenya indicates that the banking sector remains stable and resilient with strong liquidity and capital adequacy ratios. The Central Bank of Kenya has lowered the base interest rates to 9.5%. That happened this month from 10% that was reported in April. Kenya's commercial bank's average lending rate dropped to 15.4% in May, but the rate of non-performing loans increased to 17.6%. Kenya Bankers Association Director of Research and Policy, Samuel Tiringondo, says that the customer's average credit risk remains elevated in the period. Let's see what's happening now in the crypto space, and we have some headlines and what's going on with the prizes. If we could have that, that would be nice to know what's going on. Or I wonder, do we have Blessed? Okay, so let's see what's happening with the crypto headlines at this time. We hope to catch on the Ghana economy. Interesting things happening in Ghana at this time. It's the good and it's the bad. So gold mining has increased. We've seen the positives of that. But also, we've seen how they have affected Afrexim Bank negatively and the downgrade by Fitch. Well, I guess we are still around Kenya, yeah? So Kenya is eyeing cryptocurrencies to reduce transaction costs. The innovation survey by the Central Bank of Kenya revealed a growing interest among commercial banks in leveraging virtual assets such as cryptocurrencies and stablecoins to enhance transaction speed, lower cross-border payment costs, and provide alternative investment channels. That's a top story there in the crypto space. The other one is in Ukraine. Well, Ukraine is looking to add Bitcoin to its national reserves and it's described as a historic draft law. Ukraine's parliament has introduced a draft bill to allow Bitcoin and other digital assets into the National Bank of Ukraine's gold and foreign currency reserves. And this, of course, indicates a major shift in the country's financial policies. And the legislative step has drawn global attention, sparking discussions online. Many experts view it as a milestone for national level cryptocurrency adoption, although the central bank has not yet released formal guidance on that. I believe we have a third headline. There you have it. United States advancing crypto market structure bill. So talking about bill in Ukraine and also in the United States, it tees up stable coins. And you see stable coin, I think even in South Korea, stable coin is also getting some attention. There's some legal framework being put in place, you know, to adopt that. But, well, let's talk about this and some other issues around crypto with Onua Obodo. Is the Chief Executive Officer of Phoenix Online System. Hi, Onua. Good afternoon, and welcome to the program.
Yeah, good afternoon. Thanks for having me.
So we hear a lot of, you know, legal structure being put in place. We see it in Kenya. We see it now in Ukraine. The U.S. is already on it. South Korea. It does seem like the world is turning to virtual assets, and cryptocurrency is on top of that.
Yeah, that's true. Normally, it's expected, actually, because the fiat money system and the banking system is causing a lot of distractions within the customer base and even the banking sector. So there's need for every country and that actually has the potential to understand that how the crypto and blockchain technology works. So they're trying to cash in the situation so that they have a, kind of like a backup plan when the other systems begin to do further. The Kenya government too is also doing that too, to make sure that their currency and people have that choice to make transactional payment system from Bitcoin. Prefer that for them to have an action between both level, fiat money and that of the Bitcoin transactions. It's quite cheap when it comes to transactional fee and other payment system, and we also across the border too, it makes things very easy compared to the regular fiat money transaction.
Yeah, but I mean, it does seem like the crypto community still has a lot of grounds to cover to win the confidence of more people. They are very traditional people, especially because it has to do with, you know, funds, with their money. So even though we're hearing all this news of countries trying to give structure, legal structure to virtual assets, individuals are still finding it difficult to actually really trust that space.
Yeah, that is expected because currently now that's where the legal framework comes in when it comes to regulation, proper regulations that can allow people to have more confidence in the Bitcoin transaction. And with that, people are beginning to get sensitized concerning the Bitcoin, how it works. People hear a lot about it, but there's more of the scam aspect of it. So with government coming into the system, there will be a better law and policies that can safeguard both the customers and the people involved. In the US, currently there's a law and a bill up in the moment right now to actually regulate the system. And the US is using it as the backup plan for their transaction, even their global and economic policies. Currently, the US is actually owing about the national debt of to about $36 million. Now, with the economy as the way it is right now with China, with trade wars and all those things, Bitcoin reserve strategy, we actually prepare them for a better opportunities to edge within those volatility between the fiat money and the US economy. So with that, when government comes to the situation, there will be a better framework to organize the customers and the people trading on the cryptocurrency to make it a more better space for them.
Yes, I know back here in Nigeria, the Investments and Securities Act has been signed into law. But, I mean, does it feel like we are missing out? Look at Kenya now, looking at reducing transaction and turning the way of virtual assets.
Yeah, in Nigeria, the government is actually doing a lot, but they need to do more, actually, because the speed at which these transactional things with the cryptocurrency generally is moving very, very fast. So Nigeria needs to be on top. Currently, Kenya ranked the highest in Africa when it comes to innovation, when it comes to innovation towards Bitcoin and cryptocurrency generally. So Nigeria needs to tap into it. And this general notion in Nigeria and about cryptocurrency being maybe not maybe a scam or whatever, they need to look more into the situation so that we can tap into the innovations much earlier before it escalates. Because currently now the Bitcoin currency is moving at an exponential rate at this moment. Price actually hit about $112,000 for one Bitcoin recently, about a few days ago. It's currently ranging now for a momentum to the upside too. So Nigeria can't go below that. We need to create more attention towards it, to at least to cushion our financial system in the country.
Yeah, and I guess it will also be important to talk about the peer-to-peer, which some platforms have disabled. I wonder if those have come back to streamline, because this seems to be, one of the ways that gives access to a lot of Nigerians if they want to participate in crypto or virtual assets.
Yeah, the peer-to-peer companies actually, government needs to actually look into it more and bring out their own aspect of policies that can guide it. But the crypto itself actually is a global thing right now. Individuals will still trade about it. Government need to tap into it and actually to bring out a win-win situation between the people transacting within that space. The government too is working on their own token and coin, but we need more enabling environment for us to actually do our transaction and business extensively and also benefit from both ends. Yes, the Bitcoin transaction, actually people are looking at it as can also cause some form of maybe scam, fraud, or whatever. So every transaction actually has an element of risk. But this one is very more diverse because it has more security than the regular fiat money.
Anyway, so what's happening around price of Bitcoin and the altcoins? So what are the drivers now? I wonder if the London meeting also has a say in that.
Yeah, the London meeting actually is pushing it towards a selling pressure, but that's notwithstanding. Currently, the market is still an upside because it has not broke resistance to the downside. So we are still ranging at the moment, but it will actually come currently now in about a few hours from now. I think it's almost, yes, I think that started in the US right now about 8:30 Eastern time. The CPI news will come out, which will also create a bullish momentum if we close below 2.3% of the CPI. They're expected to actually have about 2.5, but from the market sentiments and our market calculations, each of all these CPI data must be below 2.3%. Once you have that, that will give us an opportunity to push the market slightly down for a great momentum to the upside. So we are seeing Bitcoin actually rally around and break the last high of $112 to the upside. So we're looking about 115 to 120 in the next few weeks.
All right, Onu Obodo, Chief Executive Officer of Phoenix Online System, thank you so much for your time on the program.
Thank you very much.
All right, let's see if we can get Blessed now. Blessed Soga is a correspondent with Joy TV in Accra, Ghana, to give us some background story of what has been going on there. We see there's been an increase in gold mining, and that has pushed the economy, that's the Ghanaian economy, into some positive lights. We see the gold for crude program, but that has been stopped. They say it's non-performance of the loans owed by government of Ghana. That's for the Afrexim. So let's see if we can have Blessed. Hi, Blessed. Good afternoon. Can you hear me? Blessed, can I hear you? Can you hear me? Blessed Soga. Blessed, can you hear me?
Hi.
Oh, finally we hear your voice, Blessed. Thank you for your time on the program.
Great to be here.
Great. So we're hearing the good and the bad in Ghana. So you've increased your gold mining. That has boosted. We see your GDP has come out better than expected. But then we also hear the story of Afreximbank being affected, by the loan performance owed by Ghana among other countries? What's the true picture? How do we balance all of this out at this time?
Well, so the truth is that Ghana's gold, or Ghana's economy is now being backed by gold. And if you look at some of the initiatives being introduced by government, it shows how the country is moving from an economy where cocoa used to be the backbone to one where gold is now the main backbone of the economy. And so, for instance, this year we've seen an appreciation of the local currency, and it's mainly because of the gold board initiative. But then also there is an old policy that was introduced by the previous administration called the Gold for Oil program that has plunged the country or the central bank into a loss of close to $200 million as a result of foreign exchange losses. And so, I mean, it's a cocktail of, feelings right now where currently the Ghanaian economy is being backed by gold, but, previous initiatives like the Gold for Oil deal, which was supposed to stabilize fuel prices and then also help, keep the exchange rate in check, has actually ended with a deep hole on the Bank of Ghana's books.
So what does all of this mean to the individuals, the Ghanaians on the street? Because sometimes we can have, the big numbers on the macro level, but looking at the micro, what's it doing to the purchasing power of the people there? What's it doing to their welfare and all? Hello, Blessed, can you hear me?
I can hear you.
Yes, I was asking what all of this means to the
Yes, I can hear you.
individuals. Okay, I was asking what all of this means to the individuals, the people on the street, the average Ghanaians.
Well, for the first time, we have Ghanaians benefiting from the gold mine. In Africa, you cannot talk about three highest gold producers without talking about Ghana. And for the first time, the country is putting in measures where inflows from gold are now being used to drive down exchange rates. And as a result of that, we've seen, the city becoming very stable and prices are falling. So for the ordinary person on the gains that the country is getting from this economy, individuals and the ordinary Ghanaian can now enjoy by having prices drop. For instance, fuel prices since the beginning of the year have dropped significantly, where even government is thinking about placing an additional tax on the export price as a result of the magnitude of the windfalls that consumers are enjoying. And so for the ordinary Ghanaian, gold, which the country has been mining for a very long time, for the first time, is being used in such a way that is being the main backbone of the Ghanaian economy. And as a result of that, exchange rate is stable, fuel prices are dropping. The first time, businesses are now considering dropping their prices. If you walk to the mall, walk to fuel prices, fuel stations, prices are dropping, and that is the kind of fiscal space that the ordinary person on the streets of Ghana is enjoying right now.
All right, sounds good. Mixed bag, though, but sounds good. Blessed Sugar, thank you so much for giving us those details from Ghana. Correspondent with Joy TV in Accra, Ghana. Well, if you would be judging from what's going on in Ghana, I guess making your economy backed by gold may be safer than crude oil. We'll see. Time will tell. It's the new days there for Ghana's resuscitation of their gold mining. It seems to be paying them, and Blessed says even the people are feeling the impact. I mean, the price of petrol has reduced from the beginning of the year, and they seem to be keeping it that way. So good luck to them, and hope Nigeria can learn a few things from that. Well, that's it on Business Incorporated today. Thank you so much for being a part of it. Tomorrow is June 12th. It's Democracy Day. in Nigeria. What picture would that bring? We will see. Thank you so much for being a part of the program today. I'm John McQuarrie. Enjoy the rest of your day.